Okay, thank you. Thanks for attending. It's nice to be back outside of Canada, outside of North America. My first trip to Europe in the last 2 years, so it's nice. I'm definitely feeling the jet lag this morning though, so see how we go. 10 minutes is a very short time period to kind of get through the presentation and see if we can get through that in that time. So we are a mid-tier producer. We produce about, this year in 2021, we'll produce about 8 million silver equivalent ounces. That's between silver and gold, so we have no base metals in our portfolio. 60% of our revenue will come from silver and 40% comes from gold. We have a phenomenal balance sheet at this point. We have over $100 million in cash. Our working capital is close to $150 million, no long-term debt. And hopefully in the coming months that will change. We have a significant growth profile. So basically we have two assets that produce that 8 million silver equivalent ounces. We have an asset coming that we plan to build over the next 2 years that will double our production and cut our cost profile in half. So significant growth coming for Endeavour. We've always had a great track record of expanding and extending our mine lives. We've been built through the drill bit over the years, and that's not going to change. And again, obviously always looking to acquire assets. Endeavour Silver Cares, one of the big things that we do in Mexico is our social license to operate. So we're beside small communities like Guanacevi and Bolanitos, our two main assets. We've forever been there. We've always put in programs to help out our communities, whether it's with water and wells, education, hospitals. This stuff becomes very important in Mexico where we operate, and it's no different for Terronera where we're going to be building our third and obviously largest mine. Communities have been a big part of us, and we've ultimately always operated with that and put out a sustainability report over the last 8 years, and that will continue to evolve with what we're seeing in the ESG front right now for mining companies. This is where we're located. Guanacevi's up in northern Durango. It's the mine. We've been there 15 years, never had more than a 2-year reserve life. But again, through the drill bit, we've always continued to extend our mine life. Bolanitos, we've been there 14 years in the state of Guanajuato. And then Terronera is on the west coast, about 2 hours inland from Puerto Vallarta, which is a Canadian destination point for a lot of Vancouverites. And then also we have an asset up north called Perel. It's an exploration asset. We have about 40 million ounces defined, looking to grow that to 60 million to put a PEA on it. So the Guanacevi mine, it's been our cornerstone asset, produces about 5 million silver equivalent ounces for 2021. It is a higher cost mine. It's pretty mature, but we had a recent discovery called El Curso. El Curso is an asset or concessions that we acquired from Frisco, Mexican conglomerate. Sat right between our Porvenir Cuatro mine and our Malache mine. Some of the highest grade material that we've discovered at Guanacevi is here. It's grading north of 450 grams per ton, silver equivalent, silver and gold, just like what we do. Overall, it has pushed our costs up higher because we pay a sliding scale royalty here. Over $25 silver, which where we sit today, we pay a 16% royalty. It is significant, but we've discovered over 1.5 million tons here. Half of it goes to Carlos Slim, the owner of Minera Frisco, a third of it goes to, of the NAV basically goes to Carlos Slim, and 2/3 comes to us. So basically we've discovered about $300 million of NAV here. $200 million would be attributed to us. Bolanitos, pretty steady state. Again, we've been here 14 years. Never had more than a 2-year reserve life. Continue to make it grow. We have 2 years of reserves at this point, 4 to 5 years with resources. We produce about 600,000 ounces of silver equivalent, mostly in the form of gold. So this mine's actually 80% gold, 20% silver. And we'll expect this to continue over the years. But what we're talking to is our Terronera project. And so we put out a feasibility study on Terronera in September of this year. Very robust, high grade, underground vein mining, just like what we do at our other operations. We are advancing early works. And expect a formal construction decision in December or January once we put financing in place. So I touched on our balance sheet being in great shape. We are looking to leverage that up and working with European banks for project loan financing, which we expect to have done in the earlier year. But what we've ultimately uncovered here is about 90 million silver equivalent ounces with lots of exploration potential going forward. This asset will produce 3.3 million ounces of silver and 33,000 ounces gold per year. It's got a 12-year mine life, grading north of 375 grams per ton over that life. Initial capex, 175 million, which for people who followed Endeavour, the PFS had a $100 million capex. We did a lot of things to the feasibility study to make sure we could operate this mine once it goes into production, how we want to operate it. And ultimately, with feasibility study, with using spot cases now, you've got a NAV value just shy of $300 million, IRR is 30%, and payback period of 2.5 years. This mine will be in the lowest quartile from a cash cost standpoint amongst our peer group, and in the lowest decile from an all-in sustaining cost standpoint. So, bar none, one of the best projects in the silver space. We haven't seen many projects come to market in the silver space over the last 5-10 years, and Terronera is one of those. Average annual after-tax cash flow will be about $50 million per year at today's prices. The exciting part about Terronera, and just like Guanacevi and Bolanitos, is the exploration upside. So you can see on this slide on the right-hand side, that's the Terronera vein, that's the longitudinal section. You can see some of the highest grade materials at depth. We do have an inferred envelope that's not included in that feasibility study. That inferred envelope would add about another 3 years, plus it's open along strike and to depth. Additionally, we have the La Luz vein. We brought that into the PFS. It's a high-grade gold vein. It's averaging about 12.5 grams per ton. Again, open along strike and to depth. So just like at Guanacevi and Bolanitos, where we've never had more than a 2-year reserve life, here we have a 12-year reserve life, but a lot of runway to see how we can grow that. That includes the exploration potential. So we have over 20,000 hectares with over 50 known veins that we've discovered. Currently, we're drilling Los Cuates, which is in the northern portion of this area. We put out drill results on Cuates back in June. We expect more drill results out in December. It's been very positive. We've been drilling in the southeast portion of Terronera and discovered 4 veins. Some of the veins that we've discovered have close to over kilograms per ton of silver. Maybe not as long as what ultimately Terronera will be, or even as wide. But again, some visibility to how we're going to end up at Terronera, probably ultimately 15, 20, 25 years before we're all said and done. So a very good, robust project. And we're not done there. Continue to grow at our pipelines. The Parral project, it's currently, as I say, we're at 40 million ounces. We're trying to grow that to 60 million. We have a $2.5 million budget on that for 2021. We'll put out results hopefully by the end of this year. Continue that exploration program into next year, and then by the end of next year have a PEA on it. So hopefully another asset that comes on behind Endeavour after our 2-year build cycle at Terronera. We also acquired a new asset up in Nevada. It's got historical ounces defined, about 300,000 ounces of gold. For us, this was opportunistic. It was sitting in a Canadian junior company that was running out of funds, and God bless them, they actually were able to put debt on their books as a junior exploration company with no cash flows. Naturally, they ran into cash issues, and we were able to pick this up for $10 million. Had a historical PEA on it for about 80 million NAV using $1,300 gold. So our plan in Nevada here is to prove out those resources, hit some exploration targets that we expect, then ultimately put a PEA on this to hopefully add value for our shareholders in a relatively short period of time. Again, built through the drill bit. We also have assets down in Chile. So we've made a step out into Chile about 8 years ago, picked up a number of properties over the years. Discarded a bunch, but ultimately have these 3 assets that we brought out in 2019. Continue to drill Paloma. It's a gold asset. Aida, we're waiting for permits. It's a epithermal vein system similar to the Bolivian silver belt. It's in Chile though, which is a positive. We expect to drill that in the new year. Quickly, our capital structure. We have 170 million shares outstanding. We're currently sitting just below $1 billion US in market cap. Great coverage, again, great balance sheet, and ultimately some of the best leading beta to silver. So as I touched on, 60% of our revenue comes from silver, 40% comes from gold. Keith touched on this earlier today. A lot of those names you see on there are predominantly gold producers with the name silver in there. So we are one of the best spots to be able to play if you believe in the silver price going forward.